Hello and welcome to today's more important Thursday, 20th of November, with me, Rich Perry, market analyst at Handtech Markets. These European trading indices have started on the back foot actually, and that's broadly come about as a result of the disappointing German flash PMI that came out this morning. That came after the Chinese PMI disappointed overnight, so it sort of already had the markets on the back foot, and then the German PMI data came in disappointingly. Basically, the German PMI has fallen back to 50.0, which is bang on the line between zero growth and contraction. And basically, it just means that just sort of puts expectations of potential German economic recovery, just on the back foot, and certainly that's just hit the euro slightly. The euro had been reasonably positive after the French PMI data, but the French PMI data that was below 50 improved slightly and slightly better than basically in line with expectations, but certainly the it just remaining under 50 just means that the French economy is not is contracting less than had been previously, but certainly is still contracting. So the problem is that with the German data also disappointing as well and falling back towards flatlining, then that puts pressure on the eurozone once again, and certainly the euro has reacted to the downside. Fell about 30 pips on the German news, and now it's about 40 pips lower on the day. That's certainly leading to dollar strength across the board. Dollar is having a nice rebound today. It continues in this range, you would argue, but certainly it's stronger today against all the Forex majors, and having a decent run higher on the day. There is a lot of other economic data out today that could certainly have an impact across these markets. UK retail sales comes out very soon, 3.8% expected on the year, and that's at 9:30. But the main focus probably today will be the US CPI inflation data at 1:30. Now there is an expectation of a slight dip in inflation back to 1.6% for year on year, and that will certainly be a driver of dollar trading today. However that comes out, whether it meets or misses expectations. Then you've also got the weekly jobs claims at 1:30. Sorry, let me just show you the CPI chart there. You've also got the jobless claims at 1:30. 286,000 is the expectation, basically in line with last week, 290,000 last week. And then at 3 o'clock you got the existing home sales, again basically expected to be broadly in line, 5.16 million, so it's a very slight dip from last month, but certainly this nice trend of improvement in the year continues. Now that sort of takes me to my chart of the day, which is dollar Kiwi, again another Forex pair. As I said, the dollar is strengthening today, and this Kiwi chart I think is showing that, and certainly in the last week, the Kiwi has had a series of negative signals. Actually, you've had a couple of shooting stars, you could argue, negative candlesticks on Monday and Tuesday. That followed up by a big block of negative candlestick yesterday, and that's sort of been continued today. And certainly if you look at these momentum indicators, they're basically just unwound an oversold position. RSI sort of rolling over again around the mid 50s and dropping away. MACD lines just unwinding back towards that neutral line and beginning to fall away. And the interesting one I think here is the stochastics, which has given a crossover, and that crossover is similar to the one that we saw in October, just prior to the slide through late October into early November. So it could well be that we're seeing the early stages of that move. We're seeing pressure, this is on the hourly chart, we're seeing pressure on the 78.22 mark. I suppose that you could argue that maybe even if you take that as a spike, then you've already seen a move below the support around 78.40, but I'm going to take 78.20 as a sort of like a confirmation move. It's already dipped below that today, but on a spike, if you start to see them move back below 78.22 again, that recovery from that spike has sort of run out of momentum already. Looking at these momentum indicators on the hourly chart as well, look at the MACD lines. Had been in positive configuration throughout this rally, but now decisively below zero, but decisively below neutral, and looks far more negative. Also the stochastics as well, far more in negative configuration. So it just looks like this Kiwi dollar rebound has run out of steam. You'd probably be using any sort of rallies as a chance to sell. 78.80 probably would be a decent area to sell, but I think that's probably now a resistance, so I think you could be using that maybe up towards that spike high that we saw yesterday, 78.93. But I think the main resistance is probably from this sort of neckline of this top pattern that you've got on the hourly chart, and that comes in around 79 big figure. But I think any sort of rebound on Kiwi dollar is a chance to sell. Maybe we've even seen that following on from that spike, but it certainly looks like it's gathering momentum for a bid to the downside. For pressure to the downside, and probably a retest of that 77.10 support. But if you look on this daily chart, then you'll probably be finding a move back towards that low at 76.58. Okay, so I wish you good luck in your trading on Kiwi today, and I will speak to you later. Thank you.